Good evening, guys. You can see time is around 8:58. Let's look into Nifty 50 weekly trade analysis, guys, as I have not uploaded the video throughout the week. So let's look into a weekly trade analysis in Nifty 50. Before me explaining, guys, first what we need to see is weekly pivot levels. So show weekly pivot levels and weekly daily pivot levels. So first let's look into weekly pivot levels. So if you see here, guys, this is the weekly pivot level in Nifty 50, and let's mark it out. And this is a weekly pivot level. And if you consider the daily pivot levels in Nifty 50, let's try to mark it out from Monday. So this is on Monday, guys. So this is on Monday. And this narrow pivot range is on Tuesday. And this wide pivot range on Wednesday. And this is still more wider pivot range on Thursday. And you can see this is on Friday, guys. So let's take this pivot level. So, and what you can see here is the narrow pivot range over here. And this is the weekly pivot levels, daily as well as weekly pivot levels. So what we need to see here is the bias, guys. What bias you can see is that you can see on Monday, guys, the market gapped up in spite of this huge selling pressure on Friday, guys. You can see there was a huge selling pressure. And what we could have expected is that here there is some sort of fair value gap over here. This is in a 5-minute time frame, guys. You can see clear fair value gap. And there is another fair value gap over here, but the market didn't mitigate this fair value gap. Came all the way to this order block level, guys. So what you can see here is at this order block level over here. This is a 5-minute order block. And this fair value gap, let's take this out. So this is a 5-minute order block, guys. So let's dive deeper into trade analysis of what happened. You can see clearly, even in a 1-minute time frame, as well as in a 5-minute time frame, guys, the market actually gapped up, trading above the 9 as well as the 21 moving average, and rejected price from this fair value gap over here. You can see this rejection of price from these levels, guys. So if you look into 1-minute time frame, what you can see here is that this is the fair value gap, guys, and you can see how the market rejected price from these levels and continued bearish. You can see this rejection of price from this fair value gap over here. You can see there is a clear fair value gap over here, guys. So what you could have either expected is that the market reaching all the way to this fair value gap, or what you can consider is that if you consider the swing momentum, the high to low of this candle, the fair value gap lies in this optimum trade entry zone, guys. Not just the 0.78 and 0.76 is optimum trade entry zone. Even this entire zone is an optimum trade entry zone. And you can see here the fair value gap lies over there. So what you could have expected is that the market rejecting price from this fair value gaps. And you can see a clear chop formation over here. Or you can consider this to be a market structure shift, clearly indicating bearishness, guys. This is a clear chop formation. A lot of sellers might have entered the market and sold here. And what we could have waited is for this retracement, guys, to 50 levels. So if you consider the low to high of this candle, the common point within this to the common point within this, you can see this is the 50 level, guys, where the market retraced here, rejected price from these levels and continued further bearish. So what you could have either done is to enter short position here, keeping your stop loss just above these 50 levels and targeting it all the way towards the downside. But what happened is that the market broke structure towards the upside. You can see a clear break of structure towards the upside here. So what you could have done here is that you could have exited with a small loss, guys. And what you can see here, if you try to plot your VWAP level here, you can see the market came, mitigated this zone and broke towards the downside. Or if you try to plot your anchor VWAP level, you can see both the rejection of price at these levels, and there would have been a high probability, guys, the market forming a chalk over here, retracing to 50 levels and continuing further. So this momentum though could have definitely happened. It was a clear sign that the market would have behaved in that manner. But what you need to see here is that that was in a 1 minute time frame, guys. But if you see the same setup in a 5 minute time frame, what you can see here is that the market is consolidating above the 9 as well as the 21 moving average, above the pivot levels as well as above the 200 moving average, clearly signifying bullishness, guys. So in a higher time frame setup, it clearly showing some sort of bullishness, but in a lower time frame, you can see the market broke structure towards the downside. But here the market rejected price from 550 levels and continued. But here the what you could have done, guys, what you could have done is that if you try to plot these retracement levels, the low to the high of this candle, so you could have waited for the market to break below the 0.3, 0.5 levels over here. You can see clearly the market even broke that levels, guys. But you can see immediately the market broke structure towards the upside, clearly signifying some sort of bullishness. So it was better to exit your trade with a small stop loss, guys. And what you can see here is that after this breakout structure, the market again retraced here, took support from these levels, and this momentum, guys, changed the entire sentiment of market from being bearish to bullish. Initially, the market sentiment was bullish only, guys, as the market gapped up here, and the market gapped up about this 21 moving average as well as the 200 moving average, clearly signifying bullishness. But here, the market grabbed this liquidity over here, and this liquidity was nothing but this internal liquidity, the fair value gap over here, and reversed, guys, from here. And you can see this kind of aggressive selling towards the downside, where the market formed a chalk over here, and the market again retraced to 50 levels but failed to break this low as well. Instead, the market broke structure towards the upside. As soon as this market broke structure, guys, what you could have waited is to wait for the retracement levels or the breaker block levels. And you can see this was the breaker block level. But let's not consider this, guys. We could have considered the retracement levels. So if you consider the low to high of this candle, you can see again the market taking support from 550 levels. This is the 550 level, guys, where the market is trying to take support over here. Or what you could have done is that you could have entered a position here at the same point itself where you could have entered. You could have exited a position and taken long position over here, and keeping your stop loss just below this candle itself, guys. You can see here the anchor gap level is helping, showing some sort of confluence over here. The 9 as well as 21 moving average also showing confluence. Everything is in confluence over here for you to take long position, guys. So in case if you try to plot the fib extinction levels, the common point in this, to the common point in this, to the common point in this, you can see exactly at 1.68 level is where the market came over here, guys. You can see almost to 1.68 level, or you can consider the order block level here, guys, the 5 minute order block, or there is a fair value gap over here. So you could have easily targeted to these levels, and this is how the market came, guys. You can see exactly where the market came. And after this kind of bullish sentiment, guys, again the market showed some kind of rejection. But you can see the market, if you consider the low to high of this candle over here, you can see the market is trading above the 550 levels over here. You can see this is the 550 level, guys, where market is trying to trade above this zone. And what you can see is that in case if you try to plot your fib extinction levels, the common point within this, to the common point within this, to the common point within this, so you could have targeted the 100% move. But you can see even this bullish sentiment, guys, is not strong enough as the market is taking support over here. You can see all these fair value gaps has been mitigated. And even after this kind of bullish momentum, you could have targeted the 100% move, or you could have tried your stop loss somewhere along this way. And you can see the market suddenly reversing, guys. So either you could have taken your trade here, guys, seeing this kind of support from 50 levels over here, keeping your stop loss just below this candle itself. As you can see, the fair value gap over here has been mitigated, guys. This fair value gap has been mitigated. So you could have just kept your stop loss below this fair value gap itself, below this liquidity sweep over here. You can see this liquidity sweep. The market came all the way, swept this liquidity and closed within this range. Somewhere here you could have targeted this high first, and you could have tried your stop loss all the way along this way. So this was not a good setup, guys, but definitely you could have taken even that trade as well. But you can see after this, guys, what happened is that the market clearly broke structure here, made a higher low, higher high, higher low, higher high, and you can see the market coming all the way to this levels. And here it made a lower high rise, and here you can see clearly falling structure towards the downside, and even closing below these levels, guys, clearly forming a lower low. And here is where the market clearly broke structure or sentiment towards the downside. You can see a clear chalk formation over here, changing the market sentiment initially from being bullish to bearish, guys. You can see a clear chalk formation, and with this kind of huge impulsive momentum towards the downside. And if you try to plot the high of this candle to the low of this candle, you can see clearly you could have plotted the 50 levels over here. This is the 50 level, guys, where you could have plotted over here. And in case if you try to plot the fib extinction levels, the common point within this, to the common point within this, to the common point within this, so you could have targeted the 100% move over here, Or in case if you could have just hold it on, you could have targeted the midway between the 100% as well as the 1.68 level. So I hope you're understanding guys. If you consider this swing momentum, so either you could have considered this momentum guys, but definitely you can see there is an order block level here. This momentum towards the chain where it shows some sentiment towards the upside guys. So what we could have done is our short entry is important guys, and our stop losses are important. And if you try to plot your swinger, you can see rejection of price from these levels, and you could have placed your candle stop loss here and targeting all the way to these levels over here, the 100% move. So this was one trade opportunity where you could have taken this the 100% move in case if you try to plot the fib extension level here. And you can see after this, the market shot some kind of rejection, a V-shaped recovery. You can see the three candles over here, which broke this low towards the downside. This low here, guys. You can see this low, the three candle structure, which broke this low. And immediately the market formed a chalk and even broke this previous swing high as well. So it's a clear chalk formation over here. And if you consider this momentum, guys, and if you try to plot the low to high of this candle over here, the common point between this to the common point in this, you can see the market here guys, there is an equal low liquidity over here, and the market came and mitigated this fair value gap and clearly showed some kind of bullish sentiment. And you can see this sweep price, this sell side liquidity over here, where the market here showed some kind of sell side liquidity sweep over here and immediately came back to range. And after this, guys, the market failed to make a lower low. Instead, it broke a clear structure towards the upside, clearly indicating some kind of bullish momentum. And it broke structure as well. After this kind of momentum, guys, what you can see is to plot the fib levels over here, the common point within this to the common point within this. And you can see the market retracing all the way to this 550 levels over here. This is the 550 level, guys, where market kind of retraced all the way to these levels. And you can see there is a equal low liquidity over here. And you can see this rejection candle, guys, which swept this previous sell side liquidity. That was another sweep of this liquidity over here. So let me try to zoom in, guys. And you can see this sweep of this liquidity, guys, of this fair value gap. You can see there is a fair value gap over here. And this candle which swept and closed within this range clearly signifying some sort of bullishness. So either you could have taken your position here, keeping your stop loss just below this candle and targeting all the way towards the upside. Or in case if you try to plot here also, guys, here you can see there is some liquidity over here and there is a fair value gap over here, and this candle over here guys rejected and closed above this 200 moving average, clearly signifying some sort of rejection of price from lower levels. And you can see this kind of sweep from internal liquidity, and the price continue further bullish. So either you could have taken long position here after this candle formation, keeping your stop loss just below this candle only, guys. So either of these two levels is where you could have taken. And in case if you try to plot the fib extension levels here, the common point within this to the common point within this to the common point within this, so you could have targeted it all the way to this 100% move over here. This is the 100% move, guys. Or you could have targeted this order block level, guys. I think in Nifty 50 though definitely you can. This levels though will not be perfect. So only in Bank Nifty, guys, the retracement levels would be pinpoint entries. So you could have targeted it all the way to this order block level. Or in case if you might have entered it here, guys. So in case if you try to plot the fib extension levels here, the common point between this to the common point between this to the common point between this, we can see 100% move over here. Even either you could have taken here also the 100% move is here, or here also 100% move is here. So this is where you could have targeted, and you can see this kind of aggressive selling towards the downside where the market retraced last, guys, and you can see that's where the market again retraced and show some kind of aggressive momentum. And you can see there is no fair value gaps over here, only there is a fair value gap over here. And you can see this kind of aggressive momentum immediately followed by a chalk, guys, towards the upside. You can see, I hope you're understanding, guys, what I'm saying. In case if the market sentiment would have been bearish now, guys, the market would have, you can see, immediate chalk formation, rejection of price from this order block level, guys. This is a clear 1 minute order block. The market retraced all the way to this order block level. You can see this is the last up move before it broke structure towards the downside. Again, the market aggressive momentum towards the upside, a chalk formation, and you can see this kind of hesitation in market, showing that the sellers are not strong enough here, and the market sweeping this sell side liquidity and immediately came back to range, taking long position over here and targeting it all the way towards that levels. Again, the market showed some kind of aggressive momentum towards the upside, breaking this highs over here, or you can consider this momentum over here. You can see this breakout structure over here. You can see again the market retraced to these levels over here, rejection of price, again another sell side liquidity sweep. and the market came all the way to this order block levels, and you can see rejection of price and the market showing some kind of downward momentum guys, clearly indicating bearishness. So but what you can see is that the market guys, here there is some sort of demand as the market, this was the last down move before it broke structure towards the upside, and the market came all the way to this demand levels over here. This is another 1 minute order block where the market failed to mitigate this order block level guys, and you can see with this kind of rejection the market came all the way to this order block level, and it showed another positive momentum guys with aggressive buying pressure with fair value gaps as well as imbalance. And if you try to plot this fib retracement levels, guys, the common point between this to all the way to this common point, you can see the price rejecting from 0.38 level, clearly signifying bullishness, as well as there is a 200 moving average below, guys. It is another confluence for you to take a long position. So let's take this out, guys. This anchor VWAP levels out. So this is the day VWAP level, guys. And you can see rejection of price from this 200 moving average, as well as what you can see is another sell side liquidity sweep over here. You can see there is actually a sweep of this liquidity to and the fair value gap over here. This you can see a clear sweep of this liquidity. So this is another sell side liquidity sweep with two candles, guys. The market swept this previous low over here and immediately came back to range. So after this kind of bullish candle is where you could have taken long position, keeping your stop loss just below this candle itself. And for target levels, if you try to plot the fib extinction levels over here, the common point between this to the common point between this. So what you could have done is to target all the way to this 100% move, or you can see this kind of liquidity over here, the all the way to this 101.68 level, or you could have just tried your stop losses, guys. As long as market is moving above 21 moving average is where you could have just tried your stop losses. This is how you could have taken, guys. This was a clear entry where you can see, and even this after this kind of huge bullish momentum, the market rejecting price, you can see this kind of momentum towards the upside is not as strong as compared to what we have expected. So we could have expected a huge bullish candles like this, but what happened is that instead the market showed a very balanced move. Or what you can see here is that you can see this momentum is not a balanced move, guys. So you can expect the market to break these levels, and after this kind of retracement, again the market continued further bullish. You could have just tried your stop losses here, and you can see the market here failed to make a higher high, and this is a failure swing, guys. Instead the market broke structure towards the upside, clearly indicating bearishness, or it's a chop formation. Again the market took support from this demand zone over here. You can see the market swept this previous low, but you can consider this to be a 200 moving average demand zone over here, and the market clearly came all the way to this levels, guys. Failed to just market swept this low and continued further bearishness. So but what you can consider is that clearly the market came all the way to these levels and broke these levels. So what you could have done is to plot the low to high of this candle, and you could have expected the market to retrace to 50 levels and continue further bullish over here. This is the 50 levels, guys, where you could have expected the market to show some kind of bullish momentum, retracing here, mitigating this fair value gaps, and continuing further bullish. But what happened instead is that the market showing some kind of bullish sentiment, guys, but immediately the market closed below these levels, clearly indicating bearish momentum. You can see a clear chop formation over here. Market showed some kind of expansion, consolidation, and instead of expansion, the market reversed, guys. This momentum towards the downside changed the entire sentiment from here being bullish to bearish, guys. And you can see how the market here continued further bearish towards the downside. So either if you might have entered your long position, you could have easily exited, guys, after seeing this kind of aggressive momentum. You can see this candle over here breaking both 9 as well as 21 moving average towards the downside, clearly indicating bearishness, guys. So either you could have exited your position over there with this candle over here, or you could have kept your stop loss just below this candle itself, guys. After seeing this kind of bullish momentum, you could have exited your trade. So you can see how many trade setups there are here. As I have showed you, A1 SL you could have taken since it was a clear SL hunting, guys, showing some kind of aggressive selling towards the downside, but immediately after retracement failed to make a lower low. Instead, it broke structure towards the upside. So this is a clear SL hunt, and we can see you could have accepted this loss and further entered your long position, another short position, another long position. So, and you can see the market consolidating between these ranges only. This is on Monday, guys, and you can see the whole day the market is trading above the pivot levels, clearly indicating bullishness. But what happened on Tuesday is that, guys, you can see again the market came all the way to this, gapped up all the way to this order block levels, and you can see this kind of rejection candle, guys, clearly signifying bearishness. Whenever you find this kind of rejection candles, guys, and the market closing within this range, clearly indicating bearishness, and you can see clearly the market even broke this low, or you can consider even breaking the previous swing low also, and came all the way to this demand level over here. Guys, you can see the market came all the way to this order block level, or you can consider this is a clear order block level. Guys, you can see the market taking support over here, and you can consider this to be a 1 minute order block. So there is a fair value gap between below these levels. The market came, mitigated this order block, and showed some kind of bullish sentiment. So what you can see here is that after this kind of bullish sentiment is what you can see here is that the market clearly broke structure towards the upside, clearly indicating some sort of bullish sentiment. And what you could have done is to wait for retracement levels after this swing momentum, guys. And if you plot the low to high of this candle, you can see clearly the market, guys, over here came all the way to this optimum trade entry zone over here. You can see this kind of rejection candle over here. This is the optimum trade entry zone where the market came, and there is a fair value gap along with this optimum trade entry zone over here, guys, which is an overlap. You can see the three candle structures which broke this high with a fair value gap. The market came, rejected price of this optimum trade entry zone. And what you could have considered is that the market showing some kind of bullish sentiment after the market clearly broke, rejecting price from this optimum trade entry zone and continued further bullish. This is how what usually expect. And for target levels, what you could have done is to plot the fib extinction levels, the count point within this to the count point within this. So what you could have targeted is the first 100% move and the 1.68 late. But instead, what happened here is that you can see, guys, over here the black line over here is yesterday's VWAP level, guys, and the blue line over here is the 200 moving average. So let's try to plot today's VWAP level on Tuesday, guys. This is Tuesday's VWAP level as well. You can see here, guys, the market, and there is a pivot level as well. You can see the narrow range over here is a pivot level, guys, and you can see after rejecting price from this optimum trade entry zone and the market showing some kind of bullish sentiment, clearly indicating some sort of bullishness, and a lot of buyers, my guys, might have entered, keeping their stop loss just below this candle itself. So below this candle, stop loss, and targeting it all the way to this 100% or 1.68 level. But what you can see here is that the market, guys, showed some kind of bullish sentiment, mitigated this fair value gap over here. You can see this fair value gap, guys. The three candles over here, the fair value gap over here, mitigated and rejected price from these levels and closed below this 200 moving average, the 200 moving average, as well as the what you call the pivot levels, as well as the anchor day Monday's VWAP level, guys. These three confluences over here, guys. There is a lot of confluence here. Why the market here rejected price from these levels. So I'm trying to emphasize, guys, why this zone is so important. I have told you is because there is a pivot levels, guys. Here you can see this is the today's pivot level, as well as there is the 200 moving average. There is Monday's VWAP level, and what you can see here is that again the market, guys, clearly shows some kind of downward momentum, and here market failed to make a lower low. Instead, the market showed some kind of bullish sentiment, but rejected price from here, guys. You can see this level over here. This is the day VWAP level, where the price rejecting from these levels and continued further selling. So I hope you're understanding, guys, what I'm saying. So in case, guys, you could have easily accepted your stop loss, and you can see after this kind of bearish candle, guys, what you could have done is to enter short position over here and keeping your stop loss just above this candle itself and targeting it all the way towards the downside. And for target levels is that you can consider trading it as long as it is trading below the line as well as the 21 moving average, or you could clearly identify there is a fair value gap over here. So for target levels, guys, what you can see is that the market broke here, again retraced to these levels over here, and what you can see is this is the last up move, guys. So what you can consider is that this is another order block level. You can see it's a 1 minute order block where the market came and mitigated this 1 minute order block. But market again took support from this optimum trade entry, but failed to make an higher high. Instead, it broke structure towards the downside. So in case if you try to plot the fib extinction levels here, the common point within this to the common point within this to the common point within this. So what you could have targeted is the 1.68 level. As you can see exactly where you could have targeted over here is the 1.68 level is where you could have targeted it. So I hope you're understanding, guys. Or you could have traded it as long as the market is trading. You can see rejection of price from this 21 moving average, rejection of price from 21 moving average, or in a 5 minute time frame, guys. You can see clearly even this zone also you could have traded it all the way to this low as well. Or you could have just holded on to your trade, guys. So you can see throughout the day the market is trading below, and that's how you could have traded it. You can see the market rejecting price came all the way to 1.68 level, and throughout the day, guys, the market is trading below the lower levels itself. You can see the market here swept this high, immediately reversed over here. Okay. You can see this kind of momentum, guys. There is no point in entering this kind of candles over here. You can see during the second half of the day after this kind of huge bearish momentum is the market kind of consolidating in a sideways manner, guys. You can see definitely there are a lot. I'm telling not to take this kind of trade is only because, guys, you can see there is no imbalance. There's no imbalance only, guys. You can see the market retraced, guys, which showed some kind of momentum, but you can see this kind of bearish momentum where the market even broke this low, guys. Even though the market broke this low also towards the downside, but what you can see is that this selling over here is not strong enough, guys. You can see each and every candle is showing a very balanced move with no fair value gaps as well as imbalance also. So what you could have expected is that definitely the market's gonna reverse, but you can see clearly the market reversed here, guys. And you can see a clear chalk formation over here, or you can consider this to be a market structure shift. So let's consider it to be a chalk formation. Again, the market retraced, guys, after forming a chop. And if you consider the low of this candle to all the way to the high of this candle, you can see the market taking support from 550 levels over here. You can see there is a 550 level over here where price is taking support, 550 level. And what you can see is another sell side liquidity sweep over here. You can see, guys, here a clear sell side liquidity sweep where the market swept is low and closed between these ranges. So what you could have taken is a long position over here, keeping your stop loss just below this candle itself and targeting it all the way towards the buy side liquidity. So either you could have targeted it here, but you can see the 200 moving average rejection of price here where the market failed to make in higher high rejected price and continued further selling. And what you can see here is that there is an equal low liquidity over here. Again, the market swept the sell side liquidity and closed within this range, guys. I think this was not the perfect entry for you. In case if you might have missed out on here, you could have plotted this sell side liquidity as there is a fair value gap over here. You can see definitely there is a fair value gap over here, guys. So a clear fair value gap. So the market rejected price from this 200 moving average, mitigated this fair value gap, and you can see this kind of bullish momentum as soon as the market mitigated this fair value gap and clearly broke structure towards the upside. A clear break of structure, and you can see again the market retraced here after breaking the structure high. So if you try to low to high of this candle, again the market retracing to this optimum trade entry zone, rejecting price from these levels and showing some kind of bullish momentum. So what you could have either entered is to take long positions somewhere along these levels and targeting towards the upside. And for target levels, what you could have done is to plot a fib extinction here, the common point in this to the common point in this. So you could have targeted the 100% move here, guys, or the buy side liquidity over here. You can see there is a buy side liquidity. So this is where you could have buy side liquidity, or you could have targeted it all the way to this 100% move. But looking at this candlestick formations, guys, definitely I would not have taken position because there is no proper sentiment in market. But as of for you to show even in this kind of momentum also, you can definitely trade. And you can see again the market even swept this buy side liquidity also. This was another buy side liquidity where the market swept, and you could have expected some kind of liquidity run where the market would have a further move, but instead we called it as a buy side liquidity because the market swept this liquidity and formed a chalk towards the downside, a clear chalk formation, right? Clearly showing bearishness, and you can see how the market consolidated and continued further selling towards the downside. So if you consider this momentum towards the downside, yes. So if you consider the compounded in this to the compounded in this, you can see the market rejecting price from 0.38 level over here, and again came all the way to these levels. So what you can see is that the market rejecting price from 0.38 level over here. So what you can see here is that after sweeping this buy side liquidity, guys, the market came, rejected price from these levels and formed a chalk over here. And in case if you try to plot the fib extinction levels over here, the common point between this to the common point between this to the common point between this. So you can see the market here clearly showed our target, guys, the 100% move and a clear target formation, target formed. So this is one trade setup where you could have taken after seeing this kind of rejection of price from these levels and price continuing further towards the downside. So short position here, keeping your stop loss just above this 200 moving average over here and targeting the 200% move or this sell side liquidity over here. This was another sell side liquidity over here where the market swept and immediately came back to range. So and you can see again the market came all the way to these levels, a clear bullish sentiment, but here the market rejected price. And you can see this kind of huge selling pressure, guys. Definitely in Nifty 50, guys, there The price action too, I'm not clearly well defined over here when compared to Bank Nifty, guys. In Bank Nifty, you can clearly um, see the price action over, but in Nifty 50, guys, it's very difficult to spot the price action. But what we need to see is in confluence with both Nifty and Bank Nifty, we should trade, guys, whenever we are trading. And you can see what happened on next day is that you can see the market here guys showed some kind of support here. This swept the previous low and immediately came back to range, guys. And what we could have expected here is that the market might have retraced to 0.38 levels and continued further bullish, but instead the market rejected price from these levels and continued bearish. And you can see this kind of huge aggressive momentum. And on the next day, the market showed a very huge gap down, but immediately after gap down, the market showed some kind of positive sentiment and continued further bullish, guys. So what you can see here on Wednesday is that, guys, on Tuesday, so I have showed you guys there are entries over here. There was one entry, and this one entry was enough, guys, for you. One positive entry, one good entry is enough, I guess. And let's look on Wednesday, guys. What happened on Wednesday is that you can see the market. There was a huge gap down in market. You can see a 100 points in gap down, guys. But immediately after the gap down, guys, the market rejected price from lower levels and showed some kind of positive sentiment. So what I usually do is to plot the mid of the first candle over here. So as well as the 5 minute zone, guys. So if you ask me to plot the 5 minute zone, so 1, 2, 3, 4, 5 candles over here. So this is the 5 minute zone as well, guys. So what you can see here is that the market rejected, formed a huge gap down, guys. So after this, seeing this, a lot of buyers, sellers might have retail sellers might have entered the market, expecting as the market showing a negative sentiment, there would have been further. They would have expected the market to continue further, guys. But what you can see here is that immediately the market shows some kind of bullish sentiment, guys. And if you try to plot the daily gap level over here, and you can see here the market consolidated. Here the market rejected price from this 200 moving average, clearly signifying bearishness. But after this rejection of price, guys, you could have either expected a aggressive selling towards the downside. Only then we can consider the market sentiment to be bearish. But you can see there is no fair value gaps, no imbalance even after rejection of price from this 200 moving average, as well as this kind of huge bullish momentum. And what you could have done is to take a long position over here. But what I usually do is to plot this retracement levels, guys, the high to low of this candle. Once if this 0.5 levels has been broken towards the upside is where I would have taken a long position. And you can see with this candle, guys, the market clearly broke structure. So along this way itself, you could have taken keeping your stop loss just below this candle itself and targeting it all the way towards the upside. So what you could have targeted is this order block level, guys. You can see this was the last up move before it broke structure towards the downside and with the fair value gaps. And looking at previous confluence over here, guys, so what you can see here is that if I extend it towards the upside, guys, you can see exactly where the market came all the way to this levels, guys. So what you could have targeted is all the way to this fair value gaps, and this is how you could have targeted it, guys. And you can see the market came all the way to these levels over here, the 1 minute order block levels over here, rejected price from here. And you can see what happened here is that the market, guys, clearly broke. The market clearly showed some kind of bullish sentiment, clearly broke, retraced over here, and again further continued bullish. So you could have tried your stop loss to this retracement. In case if the market sentiment would have been bullish, the market would have been broken these levels towards the upside and continued further bullish. But you can see here is where aggressive selling happened on previous day, guys. So what happened is that you could have either taken your short position here, keeping your stop loss just above that candle, because previously on previous day, guys, on Tuesday, this is the point where exactly aggressive selling happened. So either you could have entered short position over here. I have posted a live trade analysis here, guys, and I have captured this momentum towards the downside. If you go watch it, I even posted this video. Aggressive momentum where I captured it towards the downside. So short position over here, keeping your stop loss just above this candle itself. Or else what you could have done is, guys, you can see this was the last retracement where the market clearly broke structure towards the downside. So you can see clearly the market broke this structure low with immediate shock formation. And after this kind of retracement, you could have waited for aggressive selling. You could have waited for retracement, guys. So if you consider the common point in this to the common point between this, guys, you can see the market rejecting price from 0.38 level over here. You can see 0.38 level, guys, where price rejected over here. And if you try to plot your anchor gap level over here, you can see the 0.38 level as well as the rejection of this candle. This candle over here clearly shows a very good confluence over here where the price rejected from anchor gap level rejected price from 0.38 level, as well as rejected price from this 9 moving average, as well as the 21 moving average, and closed below these levels, guys. And after this kind of huge bearish candle, you can see this kind of channel pattern formation over here, clearly signifying bearishness. So what you could have done is to enter short position, guys, immediately after this candle, keeping your stop loss just below above this candle. And for target levels, what you could have done is to plot the fib extension levels over here, the common point within this to the common point within this to the common point within this, guys. So what you could have targeted is the 1.68 level, or you can see exactly where the market came all the way to 2.26 level as well, 2.61 level as well. You can see, guys, almost to this level is where the market came, or you could have exited at the 1.68 level also, guys. So you can see this was another 1.68 level where you could have exited, where the market took support and again showed some kind of bullish sentiment over here, but again rejected price from here and continued further bearish. So this was one opportunity where you could have taken this huge aggressive selling towards the downside. As the market was trading above the 5 minute zone as far as the mid of the first candle, you could have expected either some kind of support from this zone, guys. And what you can see here is that the market, guys, here shows some kind of strong support over here. You can see even after this kind of aggressive selling, but this momentum candle, guys, a very strong momentum candle over here, clearly indicating a strong bullish sentiment, guys. And with this kind of huge bullish candle, guys, what you could have seen here is that the market clearly broke this previous candle's lows, guys. You can see the previous candle's highs over here and even broke even these levels also. But what you can see is a clear market structure shift, and you can see with this kind of momentum towards the upside. So what happened is that after this kind of market structure shift, the market retraced here and made a higher high, but consolidated here. But you can see this candle over here is where the market formed. Instead of making higher high, the market formed a lower low. But what you can see here is that the market swept the sell side liquidity over here. The sell side liquidity over here was been swept because there is a fair value gap over here, guys. So all this fair value gap, the market came, mitigated this fair value gap, and immediately, guys, whenever the market sweeping the sell side liquidity and immediately comes back to range, clearly signifying some sort of bullishness. And we can see this kind of sweep, as well as the market clearly formed a chop over here, and you can see this kind of bullish sentiment over here. And if you try to plot the low to high of this candle, you can see exactly where the market came over here. The 0.38 level over here is clearly indicating the market sentiment to be bullish. So what happened is that the market swept the liquidity over here. Since there is a fair value gap over here, the market rejected price from this 200 moving average, failed to make a higher high. Instead, the market formed a lower low and lower high, and failed to make a lower low. Instead, the market rejecting price from the 0.38 level. So in case if you try to plot the fib extension levels over here, the common point between this, guys, to the common point between this, to the common point between this. So what you could have targeted all the way to this order block levels, guys. You can see there is an order block level over here, the last up candle before the aggressive selling over here. But what you can see is that above this order block, guys, there is a fair value gap over here. So we should always be careful with this kind of fair value gaps. Whenever there is a fair value gap above the order block levels, it clearly signifies that the market would fail, the order block levels will be failed, guys. So you can see there is a fair value gap above this order block, so was no point in holding on to your trade, or you could have exited here itself, guys, taking long position, or in case if you are well versed, experienced, you could have definitely holded on to your trade. And what you can see here also, guys, you can see another sweep also here. If you zoom it here, the market made a low, but with this candle, the market swept this previous low and broke structure towards the upside. And there was another internal sweep of liquidity over here. This is another sell side liquidity sweep. So if you zoom in only, then you'll be able to figure it out, guys. The previous candle, the market swept and came back to range, and this is the 0.38 level as well. Both are interfluence, guys. The 0.38 level as well as the sell side liquidity sweep. And for fib extinction levels, what you could have done is to keep your stop loss just below that candle, and you could have targeted this fair value gaps, guys. Exactly here is where you could have targeted, not even this order block level. And in case if you ask me why this order block level was successful, because there was no fair value gap above this order block level, guys. You can see there was fair value gap here, but it was mitigated and showed some kind of bearish entry. And this fair value gap also was mitigated, but here though above this fair value gap, there is no order block, there is no fair value gap. That's why the market came all the way to these levels. But here, guys, after this kind of last up move candle, there is a fair value gap above this order block levels. So that's why the market came, rejected price from these levels and continued further bearish. So this is about my trade setup, guys. And what you can see is this sell side liquidity over here, guys. So what I need to show you is the sell side liquidity over here. Again, the market came once more swept this sell side liquidity and immediately came back to range over here. And you can see this momentum towards the upside is not strong enough, guys. But the market rejecting price from these fair value gaps. What happened is that the market clearly broke this low also. Or you can consider this low, guys. This was a large down candle. But definitely here the price action is not well confirmed, guys. But what you could have done is that once if you could have seen rejection of price from this fair value gaps, the price rejecting and continuing further, guys, you can see this kind of aggressive selling towards the downside. And after this kind of aggressive selling, you could look at this kind of momentum towards the upside. You can see another channel pattern formation. And again, the market broke again. And once more, the market formed a channel pattern over here, clearly signifying bearishness. So what you could have done is that you could have taken short position here, guys, keeping your stop loss just above this candle. And what you could have targeted is this swing low here all the way to this low, guys, because there is sell side liquidity over here. So the next target was that itself, or the order block levels is where you could have targeted. The market instead swept this liquidity below and immediately came back to range. In case, guys, in case either you might have failed to capture this move, what you could have done is after this kind of momentum, guys, you could have just waited for retracement. And you can see this retracement is not strong enough, guys, compared to this aggressive selling towards the downside. So either you could have plotted the common point between this to the common point between this, and you can see the market retracing all the way to this levels over here. And you can see the sweep of liquidity here. This is a clear buy side liquidity sweep of this fair value gap over here and immediately came back to range. And you can see this kind of aggressive momentum. The dodgy candle over here swept this liquidity and came back to range, immediately followed by aggressive selling. Is where you could have taken short position over here, keeping your stop loss just above this candle. And for target levels, what you could have done is to plot the fib extinction levels, guys. The common point between this to the common point between this to the common point between this. So you could have targeted the 100% move, but the market didn't come all the way to this 100% buys. Instead, the market came to this buy side, sell side liquidity over here. You can see there is another sell side liquidity where you could have targeted, guys, in case you could have just tried your stop losses, guys. So after this kind of entry, you could see there was a positive momentum. You could have tried your stop loss anywhere here or broke even. And after continuation of price, you could have tried your stop losses here, or you could have tried your stop loss here, or you could have tried stop loss, guys. I think for me, what I want to teach you is entries, guys. I want to teach you the best entries possible, and based on that, guys, I always recommend you to learn risk management. So risk management is purely based on emotions, guys. So you can hold on to your trade, or you can trial your stop losses. Anyways, you can do, guys. So definitely, it's up to you, guys, how you wanna manage the risk. Definitely, I'll be helping you like this, like to trial your stop losses. That's how you can trade, guys. Or you can see there was a liquidity over here, so you could expect the market to come again bearish. But what happened here is that, guys, you can see even after this kind of aggressive selling and retracement, you can see this kind of momentum towards the downside is not strong enough, guys. Whenever after the retracement, guys, even after this retracement is clearly not showing any imbalance or any fair value gaps, clearly indicating after this kind of huge selling pressure, the market would reject price and continue. But after rejecting price here, guys, even the selling pressure also is not strong enough here. You can see this kind of aggressive selling here is not as strong when compared to this momentum of here. And you could have either expected the market to take support and continue further. And that's what happened here, guys. You can see the market over here show some kind of bullish momentum towards the upside, clearly indicating some sort of support. So usually this momentum also you could have captured, even this momentum also you capture only when you know how to target trade, guys. So what you could have done here is that, let me explain to you guys how to capture even that moves. So what you could have done is to plot the swing anchor gap levels over here, and what you will see here is that the market showed some kind of bullish sentiment and clearly broke structure here, or even this structure over here. So you can see a clear break of structure here, guys. This is a clear break of structure. And after this kind of bullish momentum, if you try to plot the low to high of this candle, you can see the market came and rejected price from 550 levels over here. This is the 550 levels, guys, where the market after this kind of bullish momentum retraced, took support here and continued further bullish. So, and along with this anchor wave up level, guys, you can see the market taking support over here, and the market is trading above the 9 as well as 21 moving average. After this candle formation is where you could have entered, keeping your stop loss just below this candle, guys. In case, guys, if the market you lose, guys, you will lose just 5 to 6 points, guys. But in case if you win, guys, you can see there is another buy side liquidity over here, since there is a fair value gap above these levels, as well as there is an order block level, guys. But why this order block failed is because there is a fair value gap above this order block level, guys. You can see, and that's what the market came all the way mitigated this fair value gap over here. And why the market here failed this order block, as you can see, there is a clear 1 minute order block, and but this order block has been failed, guys. So what you could have expected, the market come all the way to this order block, reject price, and continue further, but instead the market even broke this order block towards the upside, came all the way to this fair value gaps, and rejected price from these levels and continued further. So what you could have targeted is not the order block level, guys; it's the fair value gap. So I hope you're understanding, guys. You can trade market with just two concepts, guys. One is fair value gaps, another is the buy side, sell side liquidity, and a little bit concept about the demand as well as supply zones. I hope you're understanding, guys. Liquidity as well as fair value gaps. Both these concepts, guys. The buy side liquidity, the sell side liquidity. In buy side liquidity, there is buy orders and stop, buy stops and stop orders, guys. And in sell side liquidity, there is sell orders and sell stops as well. So if you try to understand and learn both this buy side and sell side liquidity along with fair value gaps, I think that's more than sufficient to to win over any market, guys. And I am promising you, in case if you master these two concepts, guys, it's more than enough for one to make. And pivot levels as well as the anchor gap levels, every moving averages, the 200 moving, everything are confluence, guys. Based on this, you can't actually trade decisions. This will help you just to make a trading decision. More, you can see here the market rejecting price over here from 9 as well as 21 moving average above the anchor area. This helps. This will help you as a confluence, guys, for you to take positions over here. And I hope you're understanding, guys. In case if you find my videos helpful, guys, please share with as many people as possible, and even they also will be helpful, guys. And if you consider this kind of aggressive momentum towards the upside, guys, what you can see is the count point between this to the all the way to the count point in this, the market mitigating this optimum trade entry zone. Either I can consider the optimum trade entry zone, or what you can see is that along with this optimum trade entry zone, what you can see is the day VWAP level, the 200 moving average, and after the market rejecting price from these levels and showing some kind of bullish sentiment, either you could have taken long position and targeting this fair value gaps or this sell side liquidity. The buy side liquidity over here, anywhere along this way, also you could have targeted this, but our stop losses is predefined. So that's how you could have traded, guys. And this is about Wednesday, guys. And coming to Thursday. Thursday is Nifty 50 expiry, guys. And what you can see here is that what happened on Thursday is quite remarkable, and this happens only once. I have never seen this kind of momentum happening, guys. Premiums over here shooted up, and I have posted a live video of this also. I captured it all the way to this momentum towards the downside as well. I have mentioned to you guys, I posted a live video. Go watch this video, guys. A 3 rupees stock went all the way to 90 rupees, guys. So I don't know like how many X. It's more than 300x, guys, of your capital. If you have invested 1 rupee, it would have become 90 rupees, guys. So 3 rupees, it would have become 90 rupees. So I don't know like how to explain to you. And on expiry day, guys, what you can see here is that this is the Monday's VWAP level. So Monday's VWAP level is very important, guys. And you can see throughout the day, guys, the market is trading in a range over here where the market was showing some kind of bullish sentiment as well as bearish sentiment over here. But what we need to see here is that clearly the market here showed some kind of bullish momentum. And what you could have done is a clear breakout structure over here. And if you consider this breakout structure, the market again came and set this liquidity, guys, this sell side liquidity over here. You can see there is a sell side liquidity over here where the market swept over here, this sell side liquidity, and immediately closed back to range. So what you could have done is that after rejecting price from these levels and closing back with to the range, guys, what you could have done is to take a long position over here, keeping your stop loss just below this candle. Or in case, guys, what you could have done is to plot the common point within this to the common point within this. So the market coming all the way to this optimum trade entry zone over here. This is the optimum trade entry zone where the price rejecting from this optimum trade entry zone. In case if you try to plot the fib extension levels, the common point within this to the common point within this to the common point within this, so you could have targeted the 100% move. So this is the where you could have captured it. So this momentum towards the upside. So a clear, or you could have just tried your stop losses all the way. So after this support over here, the market made a higher low and continued further bullish. So you could have tried your stop losses to this low here. And you can see after this, the market rejected and broke structure towards the downside. So you could have captured this momentum, guys. But what happened here is that you can see there is no fair value gaps over here, guys, or imbalance over here, there is no point in trading you, and even this momentum over here, guys. But what you can see here is that this downward sloping over here, guys, which I have already mentioned to you. Whenever you find this kind of downward sloping, guys, where price is rejecting from this 200 moving average, as well as if you consider the day VWAP level, guys. So let me plot the day VWAP level. I have seen this confluence for more than many times, guys. Whenever this, you can see, guys, whenever there is the downward sloping over here, as well as the price rejecting from this 200 moving average, as well as the daily gap level, the 9 as well as 21 moving average is where you could have taken short position over here, guys. This is exactly where you could have seen this kind of momentum, guys, many times happening. Whenever you find this kind of downward slopes, guys, you can see downward sloping momentum. It clearly signifies bearishness, guys. But upward sloping, and I have never seen that kind of upward sloping, guys, as a very bullish momentum. But I have seen rounding bottom pattern, clearly indicating bullishness. But this is not a rounding top, guys, but this is downward sloping pattern, and I have seen this kind of confluence many times. So, in case if you might have known this concept, guys, definitely you could have taken these trades over here, and you can see you could have captured a quite momentum towards the downside. You can see, guys, how the market came all the way to these levels. So what you can see is that this momentum towards the downside, where again the market retraced to these levels over here. That was the pivot levels. Again, the market broke, again retraced to these order block levels, again broke structure towards the downside. So let's try to decode this. This sloping pattern is here itself. You could have taken position, and I have mentioned to you at around 12 or 1 o'clock, guys. I have mentioned this trade to take long position or short position over here and buy puts here, guys. So in case if you might have bought puts here, guys, definitely you could have made a decent profit over here along the way. And I have posted a live trade analysis at around 1 p.m. is where I asked you to take puts. And in case if you might have taken, guys, you could have made a very decent profit along the way. So in case if you might have missed out on here, guys, what you could have done is that, so if you consider the high of this candle to all the way to this low of this candle, you can see there is a fair value gap over here. The fair value gap over here, along with this, there is optimum trade entry zone, guys. You can see the market reaching all the way to this optimum trade entry zone. So in case if you try to plot the fib extinction levels, the common point in this to the common point in this to the common point in this, what you could have targeted is the first momentum towards the downside, the 100% move. So short position somewhere here is keeping your stop loss just above this order block candle itself and targeting all the way to this 100% move. This is one trade setup where you could have definitely taken after seeing this kind of huge aggressive momentum. But you can see after this also the market shows some kind of bullish sentiment. But definitely even this trade also, guys, after seeing this kind of aggressive momentum, you could have expected the market to go further bullish. So even a lot of sellers might not have entered here. But in case if you might have entered, you could have captured this momentum, guys. But what you need to see here is that there is an order block here, guys, where the market came, mitigated its order block and showed some kind of aggressive momentum after this kind of mitigation. So this is exactly where you could have taken risk, keeping your stop losses. So your stop loss is now predefined and targeting it all the way towards the downside. So even this bullish momentum is not strong enough, and this you can see all these fair value gaps has been mitigated over here. So for fib extinction levels, the common point in this to the common point in this to the common point in this, targeting the 1.68 level. So what you could have done is that, guys, so you could have targeted all the way to this low over here, or you can see this candle. So if you consider this momentum towards the downside, the common point between this, so the retracement levels, guys, is what we need to see. The common point in this to the common point between this to the common point between this. So you could have targeted the 1.68 level. So this is exactly where you could have targeted, and you can see after this the market showing some kind of rejection of price from lower levels, so you could have exited. So this was one trade opportunity for you to take positions over here. And after this, guys, if you try to plot the high to the component in this, again the market retraced to this 50 levels and continued further bearish. So after this kind of aggressive selling, again somewhere along this way you could have taken, keeping your stop loss and targeting throughout the day, guys. Or what you could have either done is that if you try to plot, if you will consider this support over here, guys. So if you consider the component in this to the component in this, you can see this zone, this is the 0.5 line where the market broke towards the downside. This is where you could have taken, keeping your stop loss just above this candle itself and targeting it towards the downside, guys. I hope you're understanding, guys. Either you could have taken this position, or as of my live trade analysis, guys, which I have already mentioned to you at around 1 or it's around 1 p.m., guys, which I have told you. If you go watch my trade analysis, I have told you, and I have captured it all the way, guys, throughout the day. I told you, and all the way along this levels. So this exactly is where I captured the momentum, guys. So I hope you're understanding this what I'm saying. This is how I captured the momentum even before the market has formed, guys. I have told you in my live trade analysis. And in case if you go and watch, you can definitely understand what I mean. So, and there was a lot of panic over here since, guys, um, India and Pakistan war is going, it's happening right now, and the Pakistan attacked a few parts in Jammu, and a lot of civilians, around 9 to 10 civilians, have also died. So there was some panic over here, and you can see this aggressive selling. And what happened on Friday is quite not up to the mark. As you can see, the market gapped down here. After this kind of huge selling, also again the market gapped here and showed some kind of bullish sentiment or positive sentiment towards the upside, and consolidated between these ranges only, guys. And there is no clear price action over here. But in case if you ask me, guys, what we need to do on this, guys, after the market gap down is to plot the middle of the first candle. You can see if you try to plot the middle of the candle, here the market is trying to take support over here, but the market definitely failed here. So and 5 minute zone as well, guys. So 1, 2, 3, 4, 5 minute zone. In case if I try to plot the middle of the first candle as well as the 5 minute zone. So let me extend it to throughout here. This is the 5 minute zone over here. So what you can see is that in case, guys, if the market sentiment would have been bullish, the market after gapping down, the market would have been trading above this 5 minute zone and continue further bullish. But definitely this momentum, guys, where the market even broke these levels and even came all the way to this levels over here. And this was another sell side liquidity where the market swept this and again showed some kind of bullish sentiment. Definitely, this would not have happened, and this clearly signifies the market sentiment being sideways only, guys. So what you can see is that the market here felt this fight sell side liquidity and showed some kind of bullish momentum. So if you try to plot the fib levels here, the count point between this to the count point in this, what you can see is that the market mitigating this fair value gap over here, guys. So there is a clear fair value gap over here, mitigating this fair value gap, and the market showed some kind of bullish sentiment where the market clearly broke this previous high as well. Or what you can see is that here the market close showed a clear positive sentiment, clear breakout structure after this chop formation. And if you try to plot the low, the common point in this to the common point in this, you can see the market retracing to 0.38 level, or the 50 levels price is rejecting, guys. You can see if you try to plot the component in this to the component in this, you can see the market rejecting price from this fair value gap. So here, the fair value gap. So what you can consider, this is a fair value gap where price is rejecting and closing within this range and clearly showing some kind of bullish sentiment. Here is where exactly you could have taken long position, keeping your stop loss. And for target levels, either you could have drawn the fib extinction levels here, the common point in this, to the common point in this, to the common point in this, and targeting it all the way to this 200 moving average. Or you can see clearly the market coming to 3.6 level over here. This is the 3.6 level where the market came rejected price from these levels and again came back to this demand zone over here. This is another trade confluence where you could have targeted, or you can see this or this buy side liquidity levels. This was one trade opportunity where you could have taken after rejecting price from these levels. You can see this candle over here, guys, a huge bearish candle, a solid bearish candle, clearly breaking this 200 moving average towards the downside and closing. So in case if you know how the price action behaves, you could have either taken another short position, keeping your stop loss and targeting it all the way to this fair value gaps over here, guys. You can see as the market is moving in a sideways manner, you could have either expected the market to break, again come back to range. But you could have definitely traded, guys, in case if you are well versed in how and know how the market behaves, guys. Definitely you could have taken positions over here. And we can see here the market sweeping this previous high and showing some kind of bearish sentiment. Again, the market mitigating this fair value gap and continuing sweeping this sell side liquidity. Again, the market came back to range over here, mitigating this internal liquidity over here, the fair value gap over here. You can see there is a fair value gap over here. There is a fair value gap over here. The market came and mitigated. There is a lot of trading opportunity where you could have make multiple scalps, guys. You can see there was a fair value gap over here after showing a chalk formation over here, guys. You can see here the market clearly formed a chalk over here. After this, the market mitigated this fair value gap, rejected price from these levels, and clearly came all the way to external liquidity, or you can consider this to be a sell side liquidity. Again, the market after external liquidity came back to internal liquidity, and the internal liquidity is nothing but fair value gap. So again, the market mitigated this internal liquidity, and again the market went all the way to this external liquidity, or you can see this external liquidity, or there is a fair value gap over here where the market has not yet been mitigated. So you can see the market coming all the way. So either you could have taken short position here, keeping your stop loss just above this candle, or another short position somewhere along here, keeping your stop loss just above that candle, above this candle, and targeting it all the way towards the downside, targeting it all the way towards the downside. So this is how you could have traded. And here the market rejecting from 200 moving average immediately after this breakout, followed by another bearish candle and closing below this level. Also, you could have taken a short opportunity, but definitely I am not be asking you to take trades based on that, but with better confluence, guys. If you might quite understood how I usually trade, guys, in case if you might have got the perk of how I usually trade, then you could have understood how to trade, guys. So here also you can see the market over here clearly broke the structure low, guys. You can see the previous structure low has been broken, and if you consider this common point between this to all the way to this common point, the market came and mitigating this fair value gaps over here or the optimum trade entry zone. So what you could have seen is that you can see this bearish candle over here, guys, breaking both the 9 as well as 21 moving average and closing, followed by another rejection candle and closing below this range. There are two candle confluence, guys, clearly showing bearishness. So you could have either entered here, keeping your stop loss just above that candle. This candle breaking and closing. This candle went all the way, rejected price and continued further. So in case if you try to put the fib extinction levels here, the count point to this, to the count point to this, to the count point to this. So you could have targeted it all the way to this 1.68 level. So this was another target position, guys. So there are multiple opportunities, guys, for you to trade. I have missed out on a lot of scalps, guys, but I'm explaining only the swing trades, like long position trades where you could have taken. Either I could have even told this also, guys, but definitely it will be too much, guys. We should always wait for confirmation. After market formation, we can definitely predict, guys, but during the market formation, what I'm teaching is how you can predict. Uh, you can see these candles over here breaking, rejecting this. You can see during this candlestick formation only, guys, and you can just take risk to reward ratio, keeping your stop loss just above that candle. That's how you need to trade, guys. And you can see along with this kind of rejection, there is a fair value gap over here where the market came mitigated this fair value gap and the market breaking these levels. And in case if you try to plot the day view level, guys, even day view level also rejecting price over here. You can see clearly this candle over here rejecting day view level also, clearly signifying bearishness, guys. So I hope you're understanding, guys. But you can see after this kind of downward momentum, this momentum, guys, it's quite unexpected. You can't expect this kind of reversal, sudden reversal, guys. But what you could have done is to either target the sell side liquidity or the 1.68 level, or even after this kind of huge bullish candle you saw, is where you could have exited your position because you could have expected the market to continue further bullish. There is a lot of possibilities, guys, for you to think. So in case if you understand, guys, what I'm saying, try to implement at least 5 to 6% of it in every day, guys. Only then you will be a profitable trader one day. So this is what my weekly trade analysis in Nifty, guys. So I hope you're understanding. Yes, if you understand, guys, please like, share, and comment, share with your friends and family as well, and keep supporting the channel, guys. And in case if you wanna come in touch with me, wanna ask me anything, Instagram is the way to go. I would be glad that if anyone comes out, I would be helpful towards them, guys. And in this trading journey, definitely, if you're making significant progress in day-to-day life, definitely one day you're gonna be a very good profitable trader, guys. So keep persistent and be disciplined, guys. Only these two is what I always recommend, guys. One is persistence or consistency, and another is discipline, guys. So it's very easy to say, but it's very difficult to implement it, guys. So always try to do what makes your heart feel happy and persist based on that, guys. And don't be too lazy, guys. And don't procrastinate, guys. It's as simple as it. That's it, guys. So, in case if you like my videos, guys, keep supporting, guys. Thank you.